For most of us, budgeting or saving money can be a serious topic to talk about. Some may even avoid this type of conversation at all, as this is deemed a heavy responsibility. But did you know that money can be a lot of fun when used wisely? There's no better feeling than seeing that your money is working for you. Want to know how? There are lots of ways you can do that. But before anything else, don't forget to hit that notification bell and subscribe button to see more informative videos just like this one. Welcome to Fortune Figures. Here are the top 10 smart and fun things to do with your money. Number 10. Continue your education. If you're still a member of the working class, one of the best investments you can make is to obtain more education and training in your chosen line of work. Maintaining top-notch skills is doubly important amidst what is likely to be a weak employment climate for several years to come. Your career is the key to your future financial security. If you think a career change makes sense, enroll in programs that will get you up to speed in your next career. Engaging yourself into new learning is a mindset that will help you grow a successful business and reaching your financial goals. Number 9. Join an investment club. Investing is one of the only ways to earn passive income with small amounts of money. It's also a very important way to save for retirement. There are several reasons why you would want to start an investing club. The biggest is community and education. With an investing club, you're working with others to identify investment ideas, and you're probably going to learn a thing or two. Another reason why people used to start investment clubs was to save on costs like commissions. Let's say you had 20 members in your club. If you're going to buy that stock individually, it could easily cost each member $10 in commissions, so each trade would cost $200 in aggregate. However, if you pooled your money as a club and placed one trade, it would be just $10, saving you $190 each trade. Number 8. Start saving. You can't go to where you're going if you don't know what you want. Think about how you'd like your future to look and then come up with these precise saving goals. Do you have at least 3 months of living expenses set aside? If not, start saving money quickly. When you reach the milestone of having at least 3 months of living expenses set aside, challenge yourself to set more aside. Be it 6 months, 12 months, or more, of course, you don't neglect investing to earn potentially more on the money you don't plan on touching in the next 5 years. You can do the challenge of saving at least $100 monthly with banks that offer a savings account that earn their highest interest rate. The $100 in extra income can get the best rate already. Several online banks offer FDIC-insured savings accounts and money market accounts that earn more than a brick-and-mortar bank. And you don't pay any fees to open or maintain your accounts. Another option is choosing a no-free local bank or credit union. Number 7. Take advantage of credit card rewards. Personal finance experts spend a lot of energy trying to prevent us from using credit cards. And with good reason, many of us use credit cards irresponsibly and end up in debt. Frankly, having credit cards isn't really as bad as it may seem. In fact, it is a great help for emergency purposes, especially when there's no cash available at hand. Credit certainly works well when balances are paid off each month. It'll only turn disastrous when poorly managed and not having self-discipline. Before you apply for a card, you should be aware of the credit score range that the card's issuer typically demands. The lower the score, the riskier a borrower is considered, and some cards, generally those that offer the best perks and carry on annual fee, require very good or excellent credit. Several also feature targeted offers, which will save money or earn points for travel on some everyday purchases. With the right credit card, you're spending the same money you would have spent using a debt card or cash. You're getting rewards back for it. Number 6. Pay off debt and stay out of debt. Debt has a way of piling up faster than many of us realize. If you have a lot of high-interest credit card debt, for example, it can feel like you'll never make any progress. Paying off debt can seem overwhelming, but it doesn't have to be if you have a plan. One of the smartest strategies for getting out of debt is to make minimum payments on all of your debts and credit cards except for one. Choose the one debt that is charging you the most interest and focus all of your extra payments on paying off that one first. Once your first most expensive debt is paid off, take all of the money that you are paying on that first debt and focus it on the next most expensive debt. Continue this method as you pay down each of your debts, and you will be left with your least expensive debt to pay down last. This strategy will get you out of debt quickly, and you will feel encouraged as you see your progress. Number 5, start an emergency fund. Emergency funds create a financial buffer that can keep you afloat in a time of need without having to rely on credit cards or high-interest loans. It can be especially important to have an emergency fund if you have debt, because it can help you avoid borrowing money more. If starting small, try to set aside at least $500, but work your way up to a half year's worth of expenses. The right amount for you depends on your financial circumstances, but a good rule of thumb is to have enough to cover 3 to 6 months worth of living expenses. The best place to keep your emergency fund is in a high-yielding savings account, which offers a quick access and pays a competitive yield. Online banks are good options for your emergency savings because you can't just walk into the bank and withdraw your cash. Online banks also typically offer higher yields than brick-and-mortar banks. Everyone needs to save for the unexpected. Having something in reserve can mean the difference between weathering a short-term financial storm or going deep into debt. Number 4, buy a home instead of renting. Choosing to buy or rent, though, is a major decision that affects your financial health, lifestyle, and personal goals. Whichever option you choose depends entirely on your lifestyle and financial situation. But there are several differences that make renting and owning a property distinctly different. Renting a property doesn't come with all the responsibilities associated with home ownership, and you have more flexibility as you aren't necessarily tied down to your property. Owning your home gives you a sizable investment, but it does come at a bigger cost, both upfront and over the long run. However, in renting, no matter how much you invest in your lease, you will be able to profit from it simply because you don't own the property. Hence, buying a home can be a better investment choice for you. You may be able to build equity. The house naturally appreciates over time. This means that owning a property is a valuable asset, and you may sell it for a larger return, either to buy a new one or to use the money invested and grow in value. Number 3, start a vacation fund. You might not expect a financial planner to tell you to spend your cash on a vacation, but it's exactly what is recommended. Spend your money the way you deserve it. One easy way to save for a special trip is to open a dedicated vacation savings account. If you choose a high-yield savings account, your money might even grow a bit while you're looking forward to your next trip. You can open a savings account at your local bank, but if you go with an online bank, you'll be less likely to withdraw the money. Set up automatic payments into the account, and with a little restraint, leave that money there until it's time for your trip. Bulk up your account balance by depositing any $1 bills or $5 bills that you receive as change from everyday purchases. Funnel any extra money, like a work bonus or birthday cash, into your vacation funds as well. If you have a side hustle and don't rely on the income to cover your essential expenses, you can save that money towards your upcoming getaway too. An advisor also said that if you've established an emergency fund, paid down consumer debts, and have a good start on retirement, enjoy yourself and celebrate making it through a most challenging year. Number 2, start a business. If you're starting a new business, it's likely that you'll have to put up at least some of the money yourself. It can be difficult to borrow from a bank or attract other investors unless you're also investing some of your own money. You will know exactly how much money is available to run your business, and you will not have to spend time trying to secure other forms of funding from investors or banks. Self-financing your business gives you much control than other finance options. It also means that you don't need to pay back or rely on outside investors or lenders, who could decide to withdraw their support at any time. This means you will retain full ownership of the business, which in return will give you 100% of future profits. If you fund a business yourself, you will be forced to live within your means, only investing in business equipment and marketing when you need to. This can help you prioritize your business expenditure and avoid excessive spending. And last but not the least, number 1, Get a life insurance. Permanent life insurance policies are lifelong and cash value that increases over time. These permanent policies contain a death benefit, or face amount, which is the amount paid at the time of death, and a cash value that grows over time on a tax-deferred basis, similar to retirement or tuition savings plans. The type of permanent policy you will have determine the way your cash value accumulates over time. While certain permanent policies also allow you to put extra money into the policy to increase your cash value. Keep in mind that there are limits to how high your cash value can get in relation to your death benefit. If a policy is overfunded, it is deemed an investment and it loses its tax advantages. But don't worry, your insurer will be monitoring the policy to make sure it's within the guidelines. Contacting an insurance agent can help you better understand the types of life insurance and determine what kind of policy fits you and your family's needs. Nothing beats the peace of mind that having life insurance brings. Alright, that's it for today. We hope you enjoyed today's video. Do you know any other smart and fun ways on how to use your money? Comment down your answers below because we would love to hear it from you. Don't forget to like, share, and subscribe to our channel, Fortune Figures, to keep you posted on our latest updates. Thank you so much, and we will see you again next time.